Welcome to the Decision Makers. Hi, I'm Jerry Sont. Today we look at cash as an investment choice and the considerations it raises for banks and advisors and other people working in the wealth management industry. We'll tackle some of the common issues and concerns surrounding cash and provide some in-depth insights into client requirements and some solutions to meet those needs. In this program, Decision Makers will share their thoughts with you. I'm speaking now with Fiona Gomez, Senior Segments Manager, Professional and Property Services, Corporate and Commercial Segments, St George Bank. Fiona, welcome to the Decision Makers.
Thank you.
Fiona, why is there such a focus on the financial advisors industry by the banks?
Okay, Jerry, well really it's because it is a large industry. It's got about $5 billion of revenue and growing rapidly each day. Particularly for the banks, the reason we like it is that there's the ability for us to do both lending and deposit products to them. So for example, on a lending field, we can do things like give them working capital facilities, we can do funding for succession planning or merger and acquisitions. There's also other ancillary products like self-managed super funds lending or home loans. More importantly, I suppose, for banking and how it's been in the last 12 to 18 months and even maybe a touch more than that is the deposit side of the business. It's really cash rich and banks like cash for a whole variety of reasons, but especially because it gives us the ability to provide our funding.
What feedback have financial advisors' clients given you in regards to banking requirements?
Look, there's probably 5 main areas that they've given us feedback from. One is around financial stability, one is around products and features, one's very much around service, and then also being competitive in terms of pricing and remuneration. I'll just touch on them just very briefly, but financial stability, with the global financial crisis, banks or clients were very much concerned around the stability of the financial organisation. They wanted to make sure that their cash was safe. So, the government responded with a government guarantee, and but that's due to finish in 2011. So, the standing of the organisation is something that clients of the financial advisors are concerned around. The second one's really around the products and features and making sure that it is a range, so there's some choice in there because choice gives flexibility. So, if you're looking at products, you're looking at a cash suite, for example, so having a cash management account, having an online account, having term deposits, and features really around having the ability to provide real-time access, giving them the ability to get reporting from their systems and integration with different software providers. Service is probably the one thing that really stands out because we all know what it's like to deal with banks and wanting to make sure that we get a good service. So, making sure that they know who to contact, those people being accessible to them, and most importantly, that whatever queries they have get responded to efficiently. The last two are pricing. So everybody wants to, especially in their cash products, they want to get the best return for their money that they can. So, if you look at the way up between features and pricing, well, both are important, but you don't want to be paying over the odds with good features and not getting a good rate of return. And the last one's remuneration in the financial advice or wealth management industry, very much around how they get paid. So, how the banks can remunerate them for those products.
What solutions are there in the marketplace for these requirements?
The actual market's pretty well resourced at the moment. Most of the major banks have some sort of offering for cash solutions. A couple of the minor banks have offerings as well. They all vary amongst the same themes. So, they probably differentiate themselves across 3 things. One's around the product features, one is around the service model, pros and cons of all different options, and the last one's around their pricing, so their competitive interest rates.
What are some of the challenges for financial advice firms and what impact will this have on their banking moving forward?
Okay, there's probably 2 main challenges that I can see moving forward. One is very much around cost efficiencies for the firm. So through the global financial crisis, we saw that businesses were very much trying to reduce their costs because their revenues were falling. And through banking, that means being technologically savvy. So making sure that you've got online systems to allow you to replace a lot of the manual work. So if it means being able to pull off reports or having things directly reconciling, that's where your online banking systems will come into play even more so going forward. The second one's very much around specific to this industry around the remuneration. So at the moment, products, a lot of the cash products will pay commission, and in this industry we know that they're moving away from a commission-based payment system towards fees. So that's something that the banks need to come to terms with, as well as advisors.
And what has been St George's investment in this space?
St George has been involved in the cash management industry for over 15 years. We actually started with some large stockbroking firms and provided the cash management accounts for those firms. What we found was, with the industry growing so rapidly and more players coming into the market, that we needed to expand that across to all wealth management type firms. So not just stockbrokers, but to include financial planners as well. So what we actually did is we spent a lot of money. There was a significant financial upfront spend in terms of making sure that the products and the features were correct. So when we talked and looked at the feedback that clients gave us, one of them was around product features. And so we spent a lot of time making sure that we had the right integration capabilities through GPST, making sure that with the software providers like your Praemiums and your Irises, that we could do throughput reporting. And then little things like making sure that people have got access to their cash, whether it's through a branch or through online channels. What we then found was that so you need upfront spend to get the offering right, but you also need to spend money and have the ability to make sure that you can continue to deliver moving forward. So we actually looked at an ongoing spend for financial and for people, so resources being a really important part of that service. We talked about in the feedback section being important, making sure that we had a really end-to-end service model that goes through the actual advisor as a client, having a relationship manager who looks after them and their business, and then a centralised model for their clients. And the reason that we have the two models is they both have different needs, and again coming back to that ability to solve their situation, to do it quickly. So there's constant surveillance over it to make sure that it's continually meeting what it needs to be doing, and it's evolving as the needs of the clients change as well.
Fiona, as a decision maker, thank you for your time today.
Thank you, Jerry.